the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements for the day. Well, Singapore shares fell this morning as all eyes remained on heightened trade tensions between US and China. So if you look at the Straits Times Index, it was down 0.31% at 3,882 points at 10:51 a.m. Singapore time, with a value turnover of some 318 million Sing dollars seen in the broader market. Now let's take you through how the Singapore stock market ended the day. While the STI managed to eke out gains at the close, inching up 0.24%, we're looking at a closing level of 3,903 points. In terms of value turnover, that's 1.21 billion Sing dollars, while gainers outnumbered losers, 311 versus 163. Top advances for today, we've got for you DBS, UOL and City Developments Limited. And top decliners, we have Fuji Offset, GMH USD and Shangri-La Hong Kong dollars. Well, in terms of counters to watch, we have a CapitaLand Investment, because the manager of CapitaLand Malaysia Trust, which is a CapitaLand Investment subsidiary, yesterday proposed this placement of up to 435.4 million new units to raise gross cash proceeds of up to 250 million ringgit. Now, meanwhile, from Chinese EV maker NIO posting a net loss of some 949 million US dollars for its first quarter of 2025, to how investors are reacting to higher US duties on steel and aluminium. We've got more corporate and international headlines in focus today. And joining me on the line is Marcus Liu, Multi-Asset Solutions Portfolio Manager at Amundi Singapore. Marcus, welcome.
Hi, thank you, Tintian. Nice to be here.
Great to have you on board. And Marcus, let's start with Asia this time around. I mean, Asian stocks inched higher in the morning as traders braced for higher US duties on steel and aluminium. I believe the duties kicked in at around noontime. So how did Asian investors react to the news thus far? Are investors desensitized to that flip-flop US trade policy by now?
That's a really good question. I think Trump and tariffs, these two words have been on the top of minds for all investors, including myself. And this latest news on increase in tariffs on steel and aluminium from 25 to 50% starting today is the latest episode of this ongoing trade tension. So far, what I've seen today for Asian markets is that it has been quite resilient to this specific news, as I believe that this is more of a sector-specific type of tariff that impact the specific material sector, so more so than the broader market. And when I look at Asian equities from the index perspective, in fact, most of them are in the green today. Nikkei, Hang Seng, ASX all performed positively following the last night's US session, where we have seen positive jobs opening report, and it was better than expected. The job market remains healthy with steady unemployment rate and low layoffs. And also to mention, Kospi, which is the South Korean equity market, jumped positively following the election results. You mentioned are investors desensitized, and I think so. I think that investors certainly are having a bit of tariff fatigue, from these fast-changing policies. But I think, it is still important for us to be on top of each nuance of these tariffs announcements, as they do have direct impact on those companies that we invest in, especially if they fall right in the middle of the crosshair. And as such, from outside in Amundi, we believe that in this regime of high uncertainty, diversification of your portfolio is more important than ever.
I see. Well, Marcus will definitely talk more about South Korea later on. But going back to the Singapore stock market as usual, how did the STI fare today, and any surprises when we look at the biggest movers and also the sectors that they lie in?
I think in terms of STI, you highlighted earlier very well that, it started out in a slight negative. And then eventually, around 4 p.m. our time, it climbed back up and ended up in the green positively. So when compared to the regional markets, STI has been rather flat and relatively muted when compared to the Asian equity markets. The three bank stocks, which we often talk about, that weigh approximately half of the STI, have been rather flat to slightly positive, while some other counters like Singtel, SIA climbed slightly. One sector that we saw notable movements and activity today would be the real estate sector. We mentioned names earlier like UOL, City Development. Mm-hmm. They all showed positive performance, and even CDL today had a trading halt following an announcement, and it too performed positively after the lifting of its trading halt.
Okay, and Marcus, zooming in on some of the counters to watch. CapitaLand Investment on our list because the manager of CapitaLand Malaysia Trust yesterday proposed this placement of up to 435.4 million new units to raise gross cash proceeds of up to 250 million ringgit, which is around 75.8 million Sing dollars. I know you don't talk about individual companies, but generally speaking, is the current operating environment favorable for companies to raise capital and to hold on to dry powder?
Yes, I think that having dry powder in this current operating environment is generally favorable. Given the ongoing trade tensions and uncertainty, we certainly will see heightened volatility in the markets. And for companies and investors who are nimble enough to take advantage of such situations, then they could step up some assets at better valuations to take advantage of such volatility. But that said, timing the market is highly challenging. It's not for the faint-hearted, and we prefer to stay invested.
Okay. And another counter to watch for today, Marcus, is new. And I do want to take some time with this because if we look at the Chinese EV makers' performance, yesterday it posted this net loss of some 949.6 million USD for its first quarter of 2025, which is a 31.1% increase from the year-ago period, a 3.4% decrease from the previous quarter. Now, if we look at deliveries, vehicle deliveries, that stood at about 42,000 for Q1 2025, up some 40% on the year, but again down 42% on the quarter. So how would you read into the numbers? And generally speaking, what clues can we gain on the competitiveness of the global EV industry? What is the outlook?
The EV market is a very, very competitive market, especially in China, where we have other EV companies such as BYD, who recently announced steep discounts on some of its car models, and that announcement actually added pressure to its stock price almost immediately. And so companies like NIO, BYD, they're trying to move out of the very competitive Chinese market and tap onto other markets, emerging markets, even in Southeast Asia. However, I think that this is going to be a very long and arduous journey because some of these countries might not have the right infrastructure, like charging facilities, that will be ready for full transition of gasoline vehicles to electric vehicles. So this will take time. In the medium to long term, I believe that the transition to EV is a structural trend, and more nations and people going forward will definitely have an EV. So this is definitely a sector of growth, in my opinion. However, in the near term, I think we expect strong rivalry and competition in this space, and not just for Chinese car companies, but also the likes of Tesla, BMW, Mercedes. So we in Amundi, we are keeping a close eye on how in the EU and China, they do have trade talks as well. And one of the key topics that they talk about is actually the overcapacity part on EV space from Chinese. So this is something that we are watching closely.
I see. Now, if you're just tuning in, we're now in conversation with Marcus Liu, Multi-Asset Solutions Portfolio Manager at Amundi Singapore. Well, Marcus, you've briefly mentioned that as well. Across the region, we want to set our sights on South Korea because South Korean stocks and the South Korean won surged as Liberal presidential candidate Lee Jae-myung's election victory raised hopes of swift economic stimulus, market reforms, and easing policy uncertainty. What are you then keeping your eyes on where the South Korean equity and currency markets are concerned?
Yes, so Lee Jae-myung and his party has been labeled a pragmatic and pro-market government. So this win has really been very positive for the market. And like I said, today Kospi jumped over 2.5%. Then I saw that the won strengthened by almost 1% against the US dollar. So this win, together with its party, the Democratic Party, it forms a unified government, which we believe will aid in corporate reforms. And if you recall, last year, Korea has taken a page from Japan's playbook in advancing corporate reforms. So they announced this thing called the Corporate Value Up Program to help boost the value of its listed companies and alleviate the courier discount. So what is the courier discount? So actually, a lot of us conglomerates and listed companies have price to book of less than 1. So from valuation perspective, it is very attractive. So with this unified government, it makes us quite positive. We think that it could help regain some of this momentum to this program. And we are been quite positive in terms of Korean equities, especially on companies that have good valuation and are less sensitive to export and tariffs. Things that we'll be keeping a close eye on for Lee will be upcoming announcement on any future fiscal stimulus policies.
I see. Well, Marcus, aside from South Korea, let's have a look at Australia. Ali grew in the first quarter as consumers stayed stubbornly frugal. Government spending also sputtered to a standstill. So if you go by data out from the Australian Bureau of Statistics today, real GDP went up by 0.2% in the March quarter. Market forecasts were for 0.4%. So how far is this an indication of what is to come for other Asian economies, and what are the implications on the Australian equity market for now?
Yeah, for Australia, the central bank, the RBA, they have already cut interest rate twice this year from February. And in the recent minutes, they shared that, they are even open to a half-point move as compared to a quarter-point move, which it has done. And, even the market is currently pricing in like 80% probability of a rate cut in July. So that makes a total easing of almost 100 basis points. Such weaker than expected prints that we saw in Australia echo some of the recent data print we saw as well, coming from the region in Asia, which reinforces our view that we will likely see some level of monetary easing in terms of rate cuts from the central banks in this region. So just to share, not just Australia, but we also have Indonesia, India, Philippines, South Korea, Thailand cutting rates this year. So, certainly Asia is all on the same side almost, except Japan, which raised its rates. So when cutting rates and monetary easing, if it's done right, this could spur domestic consumption. It could drive more capital towards equities, and I think can improve export competitiveness. However, the Australian market, they do bear in mind that they consist a significant number of natural resources companies and are sensitive to trade and export restrictions. So given the trade tensions, these companies will still be under pressure.
I see. Well, finally, before we let you go, Marcus, the U.S. May ISM Services PMI, it is due tonight. What are you keeping your eyes on this front? Yes,
so the ISM Services PMI, this is an index that is used to, have for us investors an indication of the performance of the services companies in the U.S. And I think the consensus for this particular data for tonight is at 52, which is a slight uptick from 51.6 from last month. Well, we do not expect big deviations as we've seen from other data releases from the U.S. that the U.S. economy remains robust and resilient, and so far has been on the stronger side. However, I think there is a risk to the downside in terms of this print, as OECD recently downgraded growth forecasts, not just for U.S. but for global economy, due to the obvious things, which is tariffs and trade uncertainty. So, if it does come in much lower than expected, then the expectations of rate cuts by the Fed will be revisited by the market. Currently, it is priced at 2 cuts by the end of the year. And, we've seen this forecast and market pricing swing to 4 in the early days of April this year. So this is very volatile. Market is very sensitive. So, I believe, if this is coming much lower than expected, we could see heightened volatility in the FX and also the bond market.
I see. Thank you so much for the insights, Marcus. That was Marcus Liu, Multi-Asset Solutions and Portfolio Manager at Amundi Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.